Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, and we're at the 21st of February, 2024, and the time just getting on to 6:15, 6:20 p.m. Central Time. So, big day. We had first at 1 o'clock the FOMC minutes, and it shows continued restriction on the market. That's how I viewed it. Remember, they had not seen the CPI and PPI numbers, and they came in hot. That's the right word for them. And they're still concerned about inflation. The labor market, they don't think it's in balance yet. Balance to them, I think they're defining, so you and I will know, is probably going up towards 4% unemployment rather than sitting here at 3.7. Now, we get some reports tomorrow, and I'll talk about them in the morning. One of them is jobless claim. So we'll see if that picks up or where it's just saying. Obviously, the event of the afternoon was getting NVIDIA out of the way. And it was an interesting day. You know, last night, if you were watching, I said that the option traders had placed, let's call it bets, of an 11% volatility of a decline or a rally. Market almost got up to 10% rally after the report. So they weren't too far off. Did anybody win? Well, you didn't exceed that. So depends what you bought. you might have been right the market and wrong the option value. And that happens so darn often. That's one of the elements of options. You got to be right so many things. All right. So now that it's out of the way, you can see the stock indices are rallying a little bit tonight. The dollar broke today. I was surprised that the dollar was a lot weaker because nothing in those FOMC minutes to me looked bearish for the dollar. You got a little bit of a rally going in a number of the currencies with the exception of the Japanese yen, which continues to have the pressure on it. So you got to keep your eye on that. As I said, we have some information coming out tomorrow, and that information is the jobless claims. First, at 7:30 in the morning. Last report was 216,000 claims. We get the Federal Reserve National Activity Business Index. We get S&P Global Group, the preliminary February manufacturing and service sector PMIs come out. Then we get home sales data for January from the National Association of Realtors, and that comes out at 9 in the morning. I would expect that's not going to be a strong number given how much we've seen over the past month, the rise in interest rates, where you're up to 7.06%. Remember that we're going to have tomorrow the live What's Up webinar. I will open it at 12:15 p.m. I will start recording at 12:30. I end about 20 minutes later. I've got a lot of questions. I've already created all the charts that you've asked me to do. So those have been built for many of you. If you haven't been able to sign up yet, this is your last chance. Move your cursor to the top there. Give it a click on the icon you see, and that's the way you get it. No more invites being sent out. We've got a lot of people that have signed up. All right. If you have questions, call my staff, 866-973-2077. But don't call them after 12:15. They're not going to be able to help you. All right. So we'll already be open and getting ourselves going. So get yourself set up. All right. So what now? Well, I was asked that. I just did an interview in Australia, Melbourne and Brisbane, and the question was, and I was asked about NVIDIA. They were talking about it, and I said, okay, most analysts that I respect and I'm looking at have price objectives in the neighborhood of 800 to 850, about 5% from where it's at tonight. I said, that makes it a difficult buy at these levels. I mean, are you going to risk that money for the last 5%? And the word, the last 5%, always bothers me. Who says it has to stop at 800 or 850? They're the only game in town for the product that they have. Yes, you've got other AMDs, Intel, but those are not their product. Those are, hey, if the price is too expensive, will this do? Or if you don't need all those specific features, will this make do? That's the competition that you have to see come on. NVIDIA's got such a lead, it could be a couple of years before anybody's able to catch them. And the question becomes their pricing power and what they do. A company that brought in $22 billion in a quarter. And this is a company that 2 years ago, $1 billion was a lot of money to them. That is unbelievable when you think about it. And it just tells you how people are running at artificial intelligence. Will artificial intelligence turn out to be the game changer that so many think? I'm sure it will in certain areas, and I'm sure it'll disappoint in other areas, all right? I mean, I'd love to be able to build a system out of AI where we don't have to do anything. It's a money machine, right? You just turn it on, it's going to make trades all day long, and hey, at the end of the day, look at how much I made. Well, it's been tried. It has never succeeded that I'm aware of. Why? I don't know. But I know it's been tried. I've seen funds even put together money. We have something, and it just hasn't worked. Now, could it work down the road? Maybe. I can never say never, but when it does, what's the point of trading anymore? Just give your money to the fund and you're done. Who's it going to trade against? Well, if it always wins, there'll be nobody on the other side. I don't know what that does to the market. Just think of what I just said. So I don't think you'll hit that point. I still think the market is in many ways a random walk and reacts to ways you just don't know. As for where we're at now with the Fed, I think you have to assume that May is off the table. It's gone. It's history. It could be a June, July, it could be later. I'm still of the school that it's later. I need to see the data get to the point where the Fed finally can sigh, get a breath of sigh and go, okay, here we go. So the employment's starting to shrink on us. Inflation is starting to come down. We had that Christmas one-off, whatever it did to the market, and blah, blah, blah. But if you get another set of strong numbers, they're not going to be sighing. They're going to be gulping. And they're liable to go, maybe we got to raise rates, get a little more restrictive here. There's a lot of talk also about how do they run off the balance sheet. You're seeing that each time. Some people are worried it'll get too restrictive. We haven't seen that yet. That's the dilemma. They still can go another, as I see, a couple of $1 trillion before this thing's over. Don't know. So when we look at the S&P, for the week so far, you're up 0.18%. And look at how, on a closing basis, you're still near that all-time high. When we take a look at what the market's done, we do have a pattern that is in the bear camp. We have lower highs and a lower low setup. All right, that's important. The battleground seems to be the 18-day average of closes. You came here, bounced, came down, gave it. Are we going to get through that rally this time, or is the market going to come in and get under, for whatever reason, the 49.59 and a quarter zone and begin a correction? So if you were to ask me tonight, what is the point that gives me concern on the upside, it would be taking out the lows of today, Wednesday, 49.59 and a quarter. That could lead you back to the lower Bollinger Band. Barring that, if the market gets up and over this 59.50, well, then you're opening the door for the upper Bollinger Band, but it's not an uptrend. You'd have still, I believe, well, maybe it is. Hold on, I'll tell you. This low here we know is 49.59 and a quarter. On my swing line, I care about what this low is coming back here. 49.36 and a half. So the answer is yes, it could revert to an uptrend if the market takes out 59.50. You'd have higher highs, higher lows, and you're back into your uptrend. Are you overbought? You'd be in overbought territory. So there's the one thing that stops. Before an airplane pilot takes off, you ever look in the cockpit as you're boarding? They've got charts in front of them, check sheets and so on. They're checking off, make sure everything is right. Well, that's what's wrong. If you're overbought, even if you get the other signals, it's one of those checkpoints that says, I'd rather see the market embed, convert from being overbought than buying the overbought condition. That's my brain and how it works. In the NASDAQ, we got pretty darn close to the downside target. In the market now, it's sitting still. Now, this is the market certainly directly impacted by NVIDIA. And tonight, you can see you're still in a downtrend in this one. And you'd have to get all the way back up over 18,026.25 to negate it, but nothing can turn it into an uptrend at this point. You have the same dilemma? No. You have a more similar dilemma to the S&P. You could have higher lows, and if you take that out, higher highs. But there's nothing exciting on these charts. They're starting to look much more what? Much more sideways. Even NVIDIA's reaction, and I don't know how it'll be when we get to the morning, because Asia's open now, then Europe has to react. But the first reactions were down, up, down, and then it climbed and it got up, like I said, towards a 10% gain. I don't know where it'll be, later in the evening or any of that, but it's not exploding. It didn't go into a melt up. Could it happen tonight? Could somebody see something that we haven't seen so far? Anything's possible, but it hasn't happened. And I'm wondering if that's not where we're at. And people have asked me, so where do you think on this market? Now, I'm wondering at what point do we hit a consolidation level? A question asked of me today in Australia was, do I think there's a broadening out in the market? And I said, not yet. I said, I know analysts love to say that. But if you look at the earnings, you're not seeing that across the board. Not every company's doing well right here. Palo Alto, need I tell you? Etsy, need I tell you? I can go on and on. There's a big list of companies that are getting themselves not that good. So the question was also asked, well, higher rates for longer, isn't that going to be good for corporate profits? It is, unless employment goes up. And if employment goes up, unemployment, that is, rises, then is it? All right, then people start watching their pocketbook very different. We'll see. In the Russell, I still say this is the follower. It's in an uptrend, no question, but it's not at the all-time highs like the other markets. In the 10-year note, still bearish. In fact, what I was saying this morning to my subscribers was I'm still very much in the bear camp in TLT, BND, and these markets, but I did not want you to go into two elements. I didn't know what would happen with first the Fed minutes. I didn't think they were that important, but NVIDIA was. But you're still bearish. So until you get back over Tuesday's high, you're in the bear camp. This is the first challenge of the 100-day average in that Bollinger Band with an embedded reading. It is still bearish, but you often have trouble at that 100-day first challenge. The same thing here, even though it's under it, bears have the way until you take out the highs of Tuesday. I'm going to repeat that. And you have opened the door for that 105 area if the market wants to add here. In the dollar, you're down to key support. You're now down to the 18 and the 100-day average of closes. To negate this small downtrend, you got to pop back over Tuesday's high. If you pop over it, it's a sign that the market has run its course and the dollar's ready to work sideways to higher, in my opinion. Then in the eurocurrency, flip-flop of the dollar. Is it going to go up or is it going to run into the resistance right here at that 100-day average against the 18? They're just flipping back and forth. In the British pound, you're running the 18-day average of closes. It's given the market time to correct an oversold condition. You've cleared the highs of Tuesday. If you break back under Tuesday's low, I think that's 126.04. I think the bears will hit this market hard. And I think they'll try to put it down very quickly into the 125.27 to 125.100 zone. That's what the chart to me looks like. In Bitcoin, I still see the traders buying as long as the embedded reading is at work. And I think that they're hard at work doing that. So that's where I'm seeing the markets right now here. Then we come to the Brent WTI. You can see that the spread difference is narrowed into 509. When we take a look at the charts, I saw the API numbers tonight. And what you're getting now is the build in crude oil stocks and the draw on some of the products. Now, we're a little bit soon for maintenance to begin in parts of the Midwest, but you're at that time frame where you can do it on the West Coast, the South. Remember, in freezing weather, you don't want to do your maintenance. You want everything to be fired up and warm and all the pipes, if you will, doing their thing. But we're at that point. We still have a bid because of the Red Sea. I have not seen any movement between Israel and Hamas that looks as though something positive is happening, but nobody's going to call you or me and say there is a deal being made. It's not how we're going to know that. All we can do is hope that there is, and that Israel doesn't go into Rafah and doesn't have to do what it's threatening to do? I don't know, nor do you. But we are trying to set up a pattern that is still bullish in this market. It's a bit overbought. Same thing in the WTI, still overbought. And now you're back to the support finally in the rebound. Remember what I teach you. If you've taken my enhanced Bollinger Band course, you get up to those Bollinger Bands, you normally run out of your steam. You pull back often, not all the time, often to the 18-day average of closes to figure out what's the next move. What do you think it's doing? It's exactly what I see it doing. And last, I mentioned to you yesterday, this was yesterday. Let me get to it. Tuesday. Said you have an outside day. Be careful. If you take out the high of an outside day, if you haven't taken my outside day course, you want to. It gives you an idea that you might finally be ending this decline. And the objective is normally trying to get back up to the closest moving average. Not too far off at this point, lost the embedded reading. But from where it's at, look at that. Okay, so I feel pretty good. The stuff I try to teach and try to convey to you, it didn't just happen, all right? It's many, many years of doing it. Nothing that anybody has in charting that I'm aware of will work all the time, every single time. If you believe that, terrific. I am not the guy that believes that. I believe that it's about money management, applying things that have worked consistently and doing your darn best with that. The word consistent's always the important word. Consistent being, you can't say that you'll make a profit or a loss, but you're consistent in your approach as to how you're looking at the chart. I'm Ira. I will talk to you all, I hope, in the live webinar tomorrow at 12:15. You have a good evening.